Are you thinking about saving money on your mortgage payment or on your house payment? This is the right video to watch. Today we're going to talk about how to save money on your mortgage payment, and the reason is because it's very obvious. Interest rates have gone up. Let me rephrase that. Interest rates has really gone up, just as prices has gone up. And today to talk with me is Raquel Rivera. She is with Homeowners First. I've known Raquel for over 5 or 6 years, and she's been in business for over 25 years. So if anybody knows how to save money on mortgage payment in today's market, it's Raquel. So we're going to have a few questions she can answer for us. If you're thinking about buying a house, I'm glad you're here. Let's get right into it, Raquel. Thanks for being here, Raquel.
Thank you.
So the big question is, how can a buyer, first-time buyer or a second-time buyer, save money in this market today? Could you give us some of the programs that you work with Homeowners First and maybe other programs?
Absolutely. We have a wonderful opportunity that will help you discount your mortgage payment every month for the first 24 months of being a homeowner. So you will make a portion of the payment and the seller will make the other portion for you. So this can help save up to $900 a month on your mortgage payment in some scenarios. So definitely get pre-qualified. We'll put that structure together. But it is a true discount of mortgage for 24 months.
Mm-hmm. Cool, that's good to know. Now, is there any extra cost to the buyer or the seller pays for it? Or can you explain what the buyer needs to do to get this program?
So the wonderful thing about this is it's a payment subsidy paid for by the seller, right? So the money that the seller pays every month, we actually collect that up front in one lump sum. We put it in what's called a custodial account ran by the mortgage company. When you make your payment, the mortgage company will then disperse out of that custodial account and make the difference in the payment. So you're always making a full principal and interest payment every month, but you, the new homeowner, gets to take advantage of having a discounted mortgage payment, which helps with any type of payment shock that you might be going through with the rising interest rates.
I see. Okay. Now, when it comes to down payment, are there any specific down payment needed from the buyer or?
So any standard down payment is going to be applied. So if you're a conventional buyer, FHA buyer, you can do this with a minimal down payment, 3%, 10%, or 20%. With the down payment is flexible in this case. So it's based on what you're going to be qualified for normally.
I see. Okay. So regardless of the down payment, this is more to do with the payments, monthly payment, rather than down payment. So the more down payment you have, that's going to reduce it anyways. But with this, and what do you call this program? Is it a certain program?
So it's called a 2-1 buy down.
Okay.
And so what happens is it actually discounts the rate for the first 2 years. So let's say you start at a 7% interest rate as your permanent rate. The first year, the interest payment is paid at a 5%. And the second year, the interest goes up to 6%. Year 3 through 30 is your normal, say, 7% interest rate right now. So you cannot find any other way to discount your mortgage payment as greatly as this one is. Even by putting more money down, this is still a huge offset of mortgage payment discount for the first 2 years of your loan. So again, it's really trying to help you get acclimated to the rising interest rates and help you get in and feel comfortable gradually working into the normal payment that you will know ahead of time what it will be for the years 3 through 30.
Right. Oh, that's a great program. So you mentioned that the program is for 2 years. Let's say today, I think the rate is what, about 6.87%? And then after the inflation goes down, and let's say June next year or July, the rates go down to 5% fixed. Is the buyer in this case able to refinance? And then what happens to that extra money the seller was going to pay? What happens to that?
Those are great questions. So you can refinance this loan at any time. We absolutely want you to get the lowest payment possible. Any money left over that's in the custodial account, that's your money as the new homeowner. So anything that you still have left over is going to go towards the principal reduction in your loan. So you get the money back by reducing principal when you get the payoff. So we don't keep the money, it's all yours.
I see. Great. Okay. The other question that I have, and I get it from the buyers from these videos, is California, Orange County, for example, the median home price is almost $1 million versus Texas or Wyoming or other states. The national average for median home price is less than $400,000. So is there a limit on which program can be used on? Is there a purchase price limit, or there's no limit on that?
There's no purchase price limit, but the loan amount is the standard conforming loan amount. So
okay.
It's not for a jumbo loan per se, but this is going to be for a conventional loan.
Okay. So can you explain to them what a conforming is and jumbo is, just the difference basically? so that they get an understanding?
Yeah, so every county has a county loan limit, and when you go over the loan limit, that's what's considered a jumbo loan product. So our 2-1 buy down is structured for conforming loan limits. So usually you can buy $1 million property, 20% down. That loan amount's going to be $800,000. You'll still be able to use the 2-1 buy down on that.
Okay. Okay. So as long as they're to the limit of the conforming limit.
The loan limit.
Anything
correct.
over, they can either come up with more down payment.
Yes.
And still get the advantage.
Yeah, but the whole point is to give you a discounted mortgage payment for the first 2 years so that you don't feel so uneasy about the rising rates, and understand and find a way and know that this is a good time to buy a home still.
Great. Okay. And one more question, one last question for this topic is, when it comes to getting this loan, are there any advantages for qualifying? Like if you're getting at 5% versus the rates are 7%, do you qualify at 5% or 7%?
You're always going to qualify for the fully indexed interest, so it's always going to be at the top.
Okay,
permanent.
whatever
So
that
in this
rate
case,
is.
our
Right.
example is 7%. So what it does for you is it allows you to pay a payment that you normally would have a lower interest rate on for the first year. So again, that's how we discount the mortgage payment. The
Right.
first year, the payment is calculated at 2% lower than the start rate.
Right.
So it is a really good way to discount it. Everything's
Right.
legit and done in writing. You
Okay.
have all of your note rate writers given to you at closing, so there's no hidden fees.
Okay.
Everything's on paper.
Great.
And we have a great schedule for you, so you can kind of see what your payments are doing throughout the years.
Okay, good to know. And I know I said last question, but here's the last question. So a lot of people ask, all agents, not just me, rates have gone up, prices have gone up, gas prices have gone up. Should I wait for the interest rate to drop, or should I not buy? What would you say? How would you, not advise, but what would your suggestion be?
So my suggestion is for you not to wait, because right
Okay.
now we have the opportunity to have seller closing cost credit, which means some of your cost is going to be paid for by the seller. We haven't seen that in past markets. So even though the interest rate is what it is, if we can find a way to discount your mortgage payment and maybe have the seller pay some of your closing costs, and the mortgage payment, everything sounds really good to your budget, it is the right time to buy. If it makes sense to you, it is the right time to buy.
Okay, great. Thank you so much. By the way, that was Raquel Rivera. By the way, also my name is Mike Patel with First Team, and I appreciate you watching. And if you can subscribe and ask any questions in the comments, we promise to reply your answers right here on the comments or direct messages. Thanks again for watching.